Hey there traders, and welcome back for episode number 128 from the StockBandit.tv. Happy Mother's Day to you. Hope you've had a great weekend. So obviously this market has undergone a very big change of character since last week, and that really more than anything has been confirmed. And I say that because within this trading range that we've been in the last few weeks, we were seeing lots of added volatility, and that really flew in the face of this very clean move that we had been making on the way up from the February low. Now this added volatility and the lack of upside follow through really kind of pointed to the fact that maybe some traders were looking to get out of this market. I certainly was cautioning subscribers to only embrace strength if we could see an upside breakout from that range or a downside breakdown from that range to embrace the short side. But anything within this range, we were seeing decent rallies and then rapid reversals back to the downside. We were seeing pretty good sell-offs, and then we would of course recover quickly. And so last week we saw on Tuesday prices did exit that range to the downside, and they did so on some increased volume. Now ultimately Thursday and Friday volume really dwarfed the Tuesday and Wednesday volume, but Wednesday volume was well above average last week, and that really showed us that this was a decisive move taking place to the downside. Obviously Thursday, there's no telling what really happened on Thursday. Lots of rumors out there, but the Nasdaq was down some 200 points intraday before recovering some, and then Friday we saw some continuation to the downside. So we ended last week with 4 very big down days and a major sell-off here right off this high-level channel that we had been inside of. So for the Nasdaq, this index sold off about 8% last week. Very decisive change of direction, huge change of character. Volatility has picked up in a big way, and so for traders that's a very good thing. That means lots more stocks are on the move, and we're going to see some relief bounces at some point. No telling when that's going to happen, but that means we're getting some trades happening in both directions, which is very different from this one-way move up from the February low. So for the Nasdaq, where does this sell off in? Does it come to a technical spot on the chart? Well, if it does, the most likely area is going to be this 2100 area where the February low was marked. However, when you get a move of this magnitude and happening this quickly, this is a market that's really operating on emotion. Heavy, high running emotions. And so when you see that taking place, it means a lot of moves are overdone, and it's kind of an overreactive type of situation. And so that's what we find ourselves in. And whenever that's the case, whenever emotions are running extremely high, the technical levels don't play near as much of an importance as the fear or the greed that's out there. And so this is a very interesting spot. We could continue lower from here. We've also sold off sharply enough that some kind of a relief bounce may be in order. And so for me, my suggestion at this point is to be very cautious out there, especially early this week, as we see whether or not last week's selling pressure is going to continue into this week, if we're going to get some added downside, or if instead we're going to get some kind of a relief bounce. Now, beyond that, where do they carry? If we continue selling off, then obviously it's a spot where you want to be extremely careful with trying to buy in the face of weakness. Despite the fact that this has come a very long way in a short amount of time, that doesn't mean it can't go even lower. And so keep that in mind this week. At the same time, if we do start to get a relief bounce, we don't know that this right here is the ultimate low. We may simply see a relief bounce up to some level and then another secondary move to the downside. So that might be a better spot to be looking to initiate some kind of short sales. And so really respect an initial bounce if we start to get one, and stay on your toes out there if anything else. For the S&P 500, this index saw a low set back in February at the 1044 level, and last week we stopped shy of that. So here again, big decisive move down on very heavy volume. This index was down over 6% last week, and again, this is just a very tough spot to be initiating new buys or sells. We don't have a bounce happening yet. We also have come a very long way on the on the downside. So the short side must be walked very carefully. And for the Dow, this index actually did see a pretty close test here of that February low. It got within about 34 points of that with Thursday's move down. Of course, this index was down some 992 points intraday on Thursday before a pretty big intraday rebound. Lots of trades were actually canceled on that, and it was a big mess, and no telling what took place. But the point is, we've got a major technical breakdown here on very heavy volume, and so that is certainly worth noting. So be very careful out there if you're looking to add some long-sided market exposure, because again, many individual stocks may not recover for a while. So you might want to focus on the ETFs if you're looking to add some long-sided exposure at some point. But again, we don't know that this sell-off has completed itself yet, and so this is a very high-risk spot to be looking to add short exposure or long exposure, at least until we get some more technical clues. One last thing I want to point out is the VIX, which is the volatility index, and we've seen this index been in a downtrend for a considerable amount of time. This goes back into late 2008, and now we've broken that downtrend by exceeding both the prior highs in this index with a very big ramp here. And now we're finishing last week at the 40.95 level. Obviously, historically, anything in the 40 to 50 range is very elevated. So we're now at a spot where fear is running very high. Now, we did see this kind of anomaly back here in the fall of 2008 where the VIX approached 90, but for that matter, this index could run much higher. But initially, we're now seeing we're seeing VIX and fear really spike here and run up rapidly. So that's just kind of a sentiment indicator to pay very close attention to, that people are now very concerned out there, and that's no surprise given the changes in price that we saw take place last week. So be very careful out there in the week ahead. Watch those levels very closely, and more than anything, stand aside if you don't have a feel for what's taking place. That's perfectly fine. Caution is a very good thing in the market. There will be some lower volatility setups come along very soon, but in the meantime, obviously this is a market that the fast traders and the people who are on their toes are the ones who need to be participating. Everyone else can stand aside. So thanks for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.